Alright guys, this is going to be a video briefly explaining the market conditions and understanding when the model is going to work and when it's not. I'm not going to go too much into depth about what the model is and the sauce, but in terms of conditions and understanding when you can expect to see these trades play out more frequently versus when you're really going to have to be on the sidelines and be patient, and you're not going to find many of the model trades. So first of all, something to understand, I'm going to show examples of when price is good. So remember, how I trade is we have some sort of range. Actually, let's draw it much lower. We have some sort of range here, highs and lows, and price is just oscillating between highs and lows. And where I'm looking for these opportunities, right? The market's ranging. We haven't really chosen a direction. Sometimes, it'll look like we choose a direction. We'll break out to the downside, and then come back up, form a new range, make a new high, and then come back down. So I know this is very messy and ugly, but this is the kind of conditions that make it ideal for me as an ICT reversals trader. Now, what does that look like when you zoom out on the higher time frame, the daily 4-hour candles? It's not going to be this distribution leg. We've had this since the start of the year. We're consolidating in this range. Good ICT trades here. Now, here it's going to be almost impossible to catch a good reversal, especially when the program is just buy and we've just been on a rocket ship. We're how many points off the lows? We're like 18%, almost 4,000 points off the NQ lows. If you're looking for, remember, like I said, top of the range, bottom of the range, if you're looking for some, we're in an uptrend. If you're looking for some sort of level of sell side to get swept in order to go long here, targeting the highs and beyond, if you're looking for that, it's just not going to happen. There's very minimal setups that have presented themselves, where we sweep an overnight low or like a London Asia low. And that's something you guys need to understand. Instead of coming down to prominent levels of sell side, what we see at all-time high price action is this. We see something like this. So we make a high, then we'll just like slowly grind down. Maybe we'll get like a little impulse lower, a decently sized red candle, and then consolidate. And then we continue trading back higher. And that's kind of the program for the past couple weeks. And some examples I can show you. Today. Right, so we have this early AM high, 9:30. Sorry, we have 9:30 open, and again we come into this zone where we reaccumulate and buy orders are just being absorbed, or sell orders are just being like they're selling, and then buyers are absorbing this price, and we continue back up. You're not going to find, usually we're trading into overnight lows, London lows. You're not going to see that. I mean, maybe we can, but like, don't be surprised if we come 20, 30, 40 points off the lows and then just immediately reverse. So now going into examples of, when is price action good, specifically is when we get like this very volatile moves, trading in a couple thousand point range, and the market hasn't really chosen its direction. So for the month of, February to March, this kind of area, we're making highs, we're making lows. You can take reversals off these zones. So let's see. Let me jump to it. So like here, On the lower time frame, you can look for manipulations back up into, zoom all the way out, you can look for manipulation back up after we form the high. So, and then look for an entry short. So we have this high up here. And it's very clear, like the ICT kind of trades where we're looking for power of three accumulation, manipulation, distribution. That is more likely to occur because we are like equally likely to, um, at the highs, we're likely to come back down into the range. And at the lows, same thing. We're likely to come back down. So you can see we resweep this high. I don't know. This is the 1 minute. This is a bit too slow for me. But let's see what happens. And boom, like you just see this delivery. Now we have a sharp move down. You can expect this price to hold eventually. This price to hold and get some sort of move back up. And as you can see, let's see what happens. Price is just consolidating for the next couple sessions and move lower, resweep lows, and like you should expect price to revisit this zone sometime soon. And let's see what happens. It looks like it's coming into it. The delivery is not the best. We can zoom out on the 15-minute, but like sometime in the next couple sessions, I'm going to be expecting price to trade back up to here because we are at the lows. And as you can see, we trade back up into the midpoint. Now price is going to most likely come up, maybe fail to make a new high, and then we're just going to be in a range. But like the point I'm trying to make is like you can find opportunities within these windows. So for example, like here, what is this, the 18th of February, right here, we have been selling off for a couple of days, expecting price to come back up. We're at the bottom of the range, looking for a manipulation in order to, we have these eyes up here and up here. We have our prominent levels of sell side, the overnight lows. We're making pretty chunky moves during the overnight and we're getting good volume. So I would expect price to manipulate lower and for us to, from here, be able to form a long position to take it back up to the highs. So let's see what happens. Price plays out and boom, like this is exactly the type of textbook setups that I'm looking for. And this only can happen during markets that are ranging because I'm playing the range. I'm playing retracements back to, in an uptrend, I'm waiting for price to have a manipulation higher, resweep some sort of high, and then come back down into 0.5 in a downtrend. In a downtrend right here, price is coming into discount. I'm looking for a move up, then like a resweep of some lows, and then expansion back up, targeting this 0.5 range. This would be like a London low, for instance, and we would have this manipulation leg, this one right here. This would be at a key time like 8:30, 9:30, and you should see quick expansion. Now, to leave you guys with a final thought, don't try to force things when the setups and opportunities are not there. Remember, I'm looking for range type of trades, and because we're just getting candles that have no lower wicks, you can ignore this bull cycle. I mean, if it's very clear that the past couple of weeks, if you just click buy and then fell asleep, you would have gotten paid. And you can either adapt to the new market condition or you can wait for your model to present itself. The market's not going to go up forever. It's not going to go down forever. And it's most likely going to, we're most likely going to have some sort of retrace, consolidation, and then like another move or start of another cycle. And this is where we're going to find our ICT reversals type of trades where we're looking for, those overnight levels, power of three, things of that nature. But as of now, it's a different game. So that's the lesson for today. Hope you guys made sense of it. I have a server in the description if you want to join. It's free. I also have the paid mentorship, basically holding your hand. Most importantly, teaching you the skills to be disciplined, having the risk management in mind, and just it's all about survival, really. Surviving until you can catch those easy winning days. That's all it is. You don't, people say that you have to make money every single day. You're a day trader, an everyday trader. It's just not the case. You need to just take advantage of the opportunities that are easy, that are make sense in terms of the risk. And then other times you're just hands off. Or if you're taking anything, if you're taking jabs, then you're sizing down. So hopefully this video helps you guys. And yeah, peace out.